Hello and welcome to Pro Trader Strategies market commentary for what is it? Thursday, December the 27th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some of these different strategies that you can then implement into your portfolios, but please do that in your own way. Also, please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with our economic data. Not really anything across the pond, but here in the United States, we did get unemployment claims, and they came in at 216,000, expected to be 217,000. So right in line with expectations. That's a good sign because what we've seen with these manufacturing numbers, the Richmond Fed, Philly Fed, those all came in a little bit lower than expected. That is not usually a good sign for future growth, if you will, but we're not really seeing that slowdown on the unemployment claims, so that's actually a good thing. And we also got CB consumer confidence coming in at 128, expected to be 133, so lower than expected there, but still over 100, which is basically a confident reading, anything over 100. So that's well above that. That's a good thing to see. All right, let's talk about the overall market, especially after yesterday's big moves. We have crude oil right now coming off a little bit, but yesterday had a massive rally with the overall equities. And I've talked about this. I thought it was a little overdone to the downside into the low 40s, if you will, especially even in just to the 40s, I think is just a little bit low. I think the probably sweet spot is closer to the mid 50s. That being said, we're giving up a little bit of ground right now, and we've been seeing some builds. And nothing really concrete out of the Middle East as to whether or not they're going to hold off on some of that production. So crude oil kind of in a holding pattern right now, but above the 23 Fibonacci here would be a strong move for for crude oil, for the crude oil bulls, and for the overall economy. I think that a settlement above there would be very good to start migrating back to the value area. Now we've got gold moving higher after yesterday made it look like a really solid topping pattern with this doji here. The late day rally in the equities really caused the rest of the broader markets to start coming off, whether it was gold or crude oil for that matter. We saw a little bit of money being pulled out of those assets and back into equities. Today, another bit of a rotation as we're seeing the equities slide a little bit. More people are coming back to the gold. So all the levers and pulleys of the markets are really kind of intact right now. You can see bonds making a big move higher today, almost engulfing yesterday's bearish pattern. That being said, with the market trying to tell the Fed, to signal to the Fed that they need to hold off, these bonds may stay at elevated levels for the next few weeks. All right, so this is the VIX. VIX is starting to move higher after yesterday. Again, yesterday volatility just really getting sucked out of this market as it was rallying. Today, we're starting to see a bit of a bounce as some people are taking profits. So let's take a look at the equities. You can see with the Dow Jones Industrial Average off by about 400 points right now, off of the lows of the day. Really inside, but just about anything is a big inside day today, with the Dow Jones yesterday up almost, I think it was up 1,000 points, which is the biggest single day point move up, not percentage terms, but points in the Dow was a nice big move. Today, I think there's some profit taking going on as some investors just aren't really sure that this is a bottom. I believe we're kind of really feeling out this bottom here and just overdone to the downside, as we'll see with the NASDAQ. You can see all of these equities pretty much came down and touched on my Fibonacci levels that I didn't adjust. We'll see that a little bit better in the E-mini S&Ps, but I'll show you why I don't adjust these, because the way that they all kind of end up coming to fruition. So with this being said, we didn't get above that Fibonacci extension yesterday. It was right there on the toggle. Today, falling down and away from that. So that is acting as a major resistance area that the bulls really need to get through that and settle above in order for us to resume a whole lot of upside here. I think that we found a bottom here with this low, and I think that we're going to kind of work our way out of it to the upside going forward. Now, if we look at the E-mini S&Ps, you can see here that we did have a nice big rally again, fully engulfing yesterday's the previous bars bearish pattern. Remember, I talked about that yesterday. A big move higher would make that look very bullish, and we got that move. Not getting a whole lot of confirmation today, but I think that with that big move yesterday, bigger than I even expected, that there's some surprise in the market that people are starting to take some profit. The ones with the weak hands are taking some profits here off that move yesterday. But let's take a look at the E-mini S&Ps on the daily chart. Each one of these segments is a 30-minute chart. And as you can see yesterday, right as soon as I got done with this daily market commentary, we pretty much just rallied full unabated to the upside and finished very near the highs. As you can see, overnight inventory pretty bearish, but that is kind of normal to see something like that after a big move. The weaker hands are going to be covering those day trades. And I think that that's what we're seeing right now. Big consolidation going on throughout the day right now. Not a ton of volume, but volatility staying elevated. With that being said, I've talked about it a couple of times. I believe that I think the market is overdone. It's time to start nibbling in on this. So I've taken that opportunity to start jumping in. Not really jumping in, I'm nibbling in. And like with Netflix, I did this small as well. Went into the January, I sold the 200 puts in there for $4.80. So looking for that move higher. Can't get much higher volatility than this. So I'm looking to play that to the upside. Then we go over to Procter & Gamble. Again, Procter & Gamble went into the January, sold the 80 puts in there for 56 cents. Again, selling those 80 puts gets me well below several Fibonacci levels, as you can see. I mean, it would almost have to come down to the point of control in order to be able to get hit on that. I don't think we're going to see that. I think some of these staples like Procter & Gamble are going to stay at elevated levels as we work through some of this this market turmoil, if you will, trying to decide. People are going to put their money in the blue chips. I've talked about that. They're going to kind of stay away from tech. I got into the tech with the Netflix, I'm not going to lie, but that was very small. With some of these staples, I'm going with my normal tranche size. Starbucks, another one that's been holding up pretty well, and I went in there and decided that if we are going to see some of the sector rotation, Starbucks isn't really necessarily one of those that I see holding up or maybe even breaking up and away to new highs. So I decided to go in there and sell the January and sold the 65 calls in there, which gets me up above the 100 Fibonacci extension there. So I'm able to have a couple of resistance areas to help me out. Starbucks selling that at the 65 call area. Needed to add some kind of short deltas also because I'm very long delta oriented right now because of my market assumption. So I thought Starbucks would be a good one to add some short deltas to it. And finally, I went into Target and sold the January 56 puts in there for 72 cents. Obviously gets me well below where this 52-week low is, and it is quite a good location for the other markets as well. All right, so I'm playing that one to the upside, mostly playing to the upside, other than that Target one other than the Starbucks one where I'm playing that to the downside just to get some short deltas in there. And that's about it, other than later on today we're going to be doing a webinar, and it's going to be on the poor man's covered call. That is a great strategy, especially in a market where we're not necessarily sure of the direction, but we believe the long-term direction in the market is to the bullish side. We're going to show you how you can take these short calls in the poor man's covered call and basically finance our long delta position. I'm going to show you how to set that all up so that you can sometimes even get this strategy on for free. I'll show you how to do that in today's webinar. So check it out at protraderstrategies.com. One of the beauties in this is you're going to use a lot less margin than you would if you had to go out there and buy just stocks. All right, that's about it for today. Other than if you can't take that, take it easy.